This week on the podcast, finally some good news for businesses. Could this be the lifeline that your industry needs? We run through all of the changes the government have just made. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host Claire Hancock is a finance director, chartered accountant and entrepreneur. And every week I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So this is the power of influencers, Claire, because Dr. Alex has changed my life, hasn't he?
I came home from netball the other week and you were about 3 hours into watching Dr. Alex on YouTube, weren't you? And he's just a normal doctor and he's just giving advice on what you should and shouldn't do in your lifestyle so that you're healthier and you live longer. You're obsessed, aren't you? You're gripped.
Yeah, well, I was watching one video on the, top 11, 12 foods that you should put in your diet and whatever else. They're now on a whiteboard on the inside of our cupboard. I need to get more of these into. And I was like, I like 9 out of 11 of these. I could comfortably eat these and really enjoy it because it's just things like eggs and blueberries and cottage cheese.
Oh, I mean, I would say
with cottage cheese
I
now,
firmly sit in the camp of I don't dislike cottage cheese, but I don't think I'd ever eat it out of choice. But you were walking around the house the other day with a massive tub of cottage cheese and a spoon, and you were just like, oh my God, this is so delicious. And I was just like, no, that is bizarre. I don't know if anybody else feels the same way as you do about cottage cheese. No,
probably not. But yeah, Dr. Alex and getting healthy. How long do you think I can stay on it? I don't know, but we've this morning before the podcast, we've had walnuts, yogurt, blueberries. I mean, it's all 3 in one bowl, isn't it?
Yeah, but I mean,
we nailed it, didn't we?
I would say that stuff we would be probably in 2 days a week anyway. Now we're just
I'd let it slip.
Yeah, we had let it slip.
We've turned back onto it.
We turned to the dark side of crumpets, haven't we? They were quite nice for breakfast.
Exactly.
And here we are back on the old Greek yogurt.
Yeah. Anyway, let's move on to this week's news story of the week. So this week, I'm talking about price caps because this was an interesting article that it was all around. So the news story is called If the Price Cap Fits. And it was just talking about, obviously we talked last week about, and the episode today is going to go through all the changes that Rachel Reeves has made. So you're aware of them. And one of the things that she wanted to do was obviously put a cap on sort of basic food things. And we talked last week about the price of milk. But what was interesting in this is it went through some historic price cap things. So we talked today about how draconian it is to think that we're going to tell a supermarket that we're going to cap what they can sell it for. I mean, how crazy is that? And, we talk a bit about rent caps and things like that. But actually, there are some interesting things over time in history where price caps have been put in by various people. So the first one that I wanted to talk about was during the arrival of the railways back in the 19th century. So when the railways were first built, William Gladstone's government at the time enforced a maximum price so that working class passengers would be able to afford the tickets. So this, I'm guessing, this is a bit like new technology comes along, railways come along, and I'm guessing they weren't particularly accessible to the working class at the time. They were probably very expensive because of the capital investment. It's probably a bit like what we're seeing. Is it what we're seeing with AI? Because AI is really cheap. But I would say usually what happens when a big capital investment goes into something, they're trying to reap it back really quickly. It's a bit like drugs and various other things. They're usually very expensive, aren't they?
You mean medicines?
Medicines.
Not like heroin.
Drugs, no. But they're usually very expensive and then they get cheaper over time until eventually they probably become like pennies and various other things as the R&D comes back. So he actually put a cap in 1844. He passed the Regulation of Railways Act, and said that the fare for each third-class passenger shall not exceed 1 penny for each mile travelled. So we actually capped it.
Okay.
Which I thought was interesting. And then in 1970, and this is what I think is interesting, because I think we're seeing this now, because obviously there's lots of talk about how what we're going through at the moment is very akin to the 1970s inflation spike and things like that. And actually a lot of things happened in the government there around trying to cap prices as well, because I guess it's the obvious thing to do when everyone's complaining about cost of living crisis and various other things. This one was really strong. It was actually by Tory government. So basically, It was who was it that did it? Edward Heath. So he put a 90-day total freeze for 90 days on all prices, wages, dividends, and rents. I mean, you think about what's happening today and how we call them draconian. Imagine the government coming out and saying for the next 90 days, no one can put any prices up, no one can put any wages up, no one can put their dividends up and take any more dividends, and no one can put their rents up.
But that's the only space that this works, is if it's literally across the board blanket, because everybody's faced with the same circumstances. What you can't have is a price cap on your sales, but everybody can keep putting their prices up to you. That's the problem. So actually, not that wild.
Actually, good point. That actually you either do it blanket to everything, because then you're capping your entire economy and you're holding things where they are and everything's fair. But you're absolutely right. You can't have one where you cap the price you sell it at, but all your suppliers can put their price up on what they charge you for the goods that, make up that particular thing. Yeah, so it doesn't really work. And that was actually, it was extended further when the Labour government came in after, and they kept something called the Price Commission. They actually had, by 1976, they actually turned it into a voluntary price check scheme. So supermarkets could volunteer to participate, and products that were capped were marked with a little red triangle so shoppers could easily spot them. So it actually turned into like a little bit of a marketing thing. And then the final example, really, really recently, of price capping, which again, we just sit here today like it's normal, but actually this is kind of mad. So in 2015, the Ed Miliband of the Labour Party actually floated the idea of putting a cap on energy companies, on the price that energy companies could charge.
Well,
They
kind of do, though.
Well, this is it. This is the story. He came out and he was described as totally Marxist and that's horrific. It's communism, blah, blah, blah. And then 2 years later, the Conservatives put that in place. Interesting, isn't it? And even today, we still have a price cap on what energy companies can charge consumers that's controlled by the government.
Yeah.
How crazy.
Fixed tariffs.
Yeah. So actually, the idea of price capping is certainly not a new one. And I think there's some interesting history behind it. And obviously, it's never great because it really, really, really constrains capital markets and it really warps markets as well, hugely. So...
Wow, we've got a Rachel special today, haven't we? Because we're doing a bit of a Rachel Reeves special in the deep dive too. Yeah,
exactly. Well, let's move on and it's time to rejoice, I think. Finally, some good news from the government. So, Claire, we're going to do a roundup for everybody. There's been a bunch of announcements, which is bizarre because it's totally outside of sort of budget season or spring statement season. They just come out with these things like they did nothing to even write home about in the spring statement, and then she comes out with all
they
these...
made this big thing that they would only do, that they wouldn't be doing twice
fiscal events,
yearly fiscal event, and that it would only be restricted to the autumn. So obviously April went by and nothing happened, but then lo and behold, here we are in May, and we've got I've got seven changes.
Yeah.
That she announced, and to be honest, they were clear as mud in her speech as well. It took me quite a lot of research and digging on some of these to get some of the facts about this stuff. So we'll go through them one by one.
Yeah.
We'll start off with the 12-month vehicle excise duty. So this is essentially.
Can we start with the VAT thing and the whole? Because this is the one that I think is the funniest and most.
No. Look, I actually want to start with the ones that affect most of our customers and businesses. So the first one, 12-month vehicle excise duty holiday for HGVs, so that's heavy goods vehicles. This is essentially road tax for lorries, and this has been received with a bit of a mixed bag, because on the one hand, what they've introduced, it hasn't actually been written into law as at today, but as soon as it is introduced, when you go to renew your road tax on the DVLA website or the DVSA website, you will get you'll pay £1 at renewal. Now the problem with that is that it could take 12 months. If you've literally just paid, it takes 12 months to come into force, because it'll be 12 months until you renew.
Right.
So from that perspective, for some HGV owners or companies, it won't have an immediate impact. You have to wait 12 months to reap the rewards of that. But it's quite significant. I think it's like the current highest rate is like £912 a year for the largest vehicles.
Okay.
So, nearly £1,000 a year per vehicle. There are plenty of HGV companies out there with 15, 20 plus lorries. So, 15, 20 grand on your bottom line over the next 12 months, not to be sniffed at.
Helpful.
And
again,
the main
I guess
reason...
directly targeted at the fact that it's probably not going to remotely cover the increase in fuel costs that they've seen in the last, however. So it is token gesture still in the grand scheme of things. They're not net rolling in it all of a sudden, are they?
No, exactly. I mean, fuel costs have gone up around 50% is the sort of increase. It's up to about 60% in some cases.
And as most transport companies, probably, I guess it's their biggest cost line. You've got a lot of transport companies. I mean, what percentage usually does fuel represent of their entire P&L?
Maybe at the moment, probably about a sixth, sort of a fifth to a sixth of their costs. It depends on what type of work they do. You know, if
15,
you're a business that's like doing tramping and doing a lot of long runs.
Do you say tramping?
That is an official logistics terminology that I'm using there.
Good. I like the lingo.
Yeah. But, you know, it really does make a difference, the sort of mileage that you're doing, how much that is. But yeah, sort of 15 to 20% is quite common.
Okay.
So, it's been met with a mixed bag. Like I say, when you next renew your road tax, you pay £1 at renewal. So you can't apply for any refund or anything like that. It just simply gets automatically applied when you next renew.
Okay.
So not to be sniffed at, but doesn't help just immediately.
Move the dial.
Yeah,
great.
Okay, so the next one, Alleluia. But
this just came out of nowhere.
Yeah, but I mean, there's a double-edged sword to this because so mileage rates up to 55p per mile.
What was it
from
before?
the 45p, and been fixed for 15
years. I know. So ironically, it's probably not. It's not realigned it with inflation.
Exactly.
You know, we've seen 50% inflation in the last few years alone. So technically, the 45p, even if it was just keeping up with inflation, should be way more than that. So we're still not really moving the dial here, are we?
So look, if you've got a company car, this has no impact on you.
No.
This is if you use your own personal vehicle for business purposes, then you can take now 55p tax-free from the business for it. But the double-edged sword to that is if you're an employer and you pay mileage to your employees, then that's just increase your cost.
Yeah.
So if you as a business owner is the only person that's doing mileage, then you benefit. But if you're paying mileage to employees, then you've actually now got to pay them more. And it's backdated to the start of this tax year, so the 6th of April.
It's interesting, but that's only if your business has a policy of paying the government-issued rates. If your business has their own percentage mileage rate, so, you know, I mean, I pay like 20p, so it doesn't make any difference, does it?
Well, there are advisory fuel rates, as to say, if you just cover somebody's mileage, cost of fuel, what would that be?
Yeah.
They are actually updated quarterly, and they always have been.
But again, as I said, like, no business owner has a legal obligation to pay at this rate, do they?
No, there's no legal obligation to pay at this rate. The rate of 55p is now it's essentially what you can pay tax free.
Yeah.
So if, in your example where you pay 20p per mile, the employee can still, on a tax return or a specific form, claim the difference and get the tax allowance on it.
Okay, got you.
Okay, so the next one, fuel duty freeze. Now, this doesn't deliver an immediate cost saving, but they basically said that they will not be increasing fuel duty. And obviously there was this big sort of question mark over whether the government, it's been frozen for years now, as to whether or not it would be increased. And they've said that they will not put the 5p per litre increase, and that's fixed to the end of 2026. So just to give an idea of...
Sorry, I'm laughing because it says if you're tramping 350 miles. I love the lingo in here.
So as a typical like Arctic, for example, will do roughly about 3 miles to a litre of fuel. So you're going to be paying roughly about 50p per mile to run on fuel. So if you're doing 350 miles a day in a vehicle, which is typically the maximum that somebody can do on a tacho.
Yeah.
You're loving all this lingo, aren't you?
Love it.
So you're doing 350 miles a day on average on a tacho. That's about £5,000 a year, potentially, if you're working like Monday to Friday on a 350 miles. For one vehicle, that's £5,000 a year extra that 5p per litre increase puts on your bottom line. Yeah. So just to give you an idea of what that does mean to a HGV business, that at the moment is not baked into their costs. So they would have had to put their prices up to allow for that fuel duty increase.
Of course. And most HGV companies, they charge like fuel surcharges and things like that. So they're very much linked to these costs. So they just pass it on, don't they? I mean, they can't absorb it. They're not making the big margins. Most of these aren't.
Now, we've got two things in here for HGV companies. We've got the road tax and we've got this fuel duty freeze. But it's the way that the government announces this, because of literally logistics is in every single last thing that a consumer buys. So they're not doing this because the government are trying to help HGV organisations.
No, they're just trying to help the supply chain.
They're trying to help supply chain, and what the price that the consumer pays at a till is essentially so driven by the price of delivery.
Yeah.
So that's why that's come about. Okay, now the biggie that you wanted to speak about, the famous get a discount on your chicken nuggets.
This is the one. The thing is that there's good ones in here. This is the one that obviously got the headlines.
Yes.
And go on, what is it?
So VAT has been cut to 5% for the next 10 weeks. So it's for the school holidays, essentially, on kids' restaurant meals, kids and family tickets to a very specific list of things like cinema, theatres and exhibitions. So that's family tickets. That means adults can benefit.
Yeah.
Or all tickets for attractions. So again, a very specific list. It's like zoos, theme parks, soft plays, things like that.
Now, this is interesting because I was listening to James Sinclair, who owns a lot of attractions, especially the bottom one, the theme park, soft play, that type of thing. So he's going to be getting this cut in all of his businesses. Sounds great for him and various other things. But I think what's really fascinating is that he pitched this completely as like, oh my God, finally some respite. You know, we can actually make some margin, blah, blah, blah. Not, I'm going to cut my ticket prices by 15%. And this is the like, I don't know, call it what you like, controversial thing, his view was very simple, which was this allows me not to put my prices up now. Whereas I think that Rachel Reeves and the consumers would be like, no, I expect my ticket to come down by 15%. And I think this is where it's going to be interesting as to what people are going to do. I mean, I know what I would do after I've been battered by the government this hard as a hospitality. I wouldn't be passing on any of this. I would be using this to keep my business alive. I think I'd be interested to get your view, truly, like if you got under the bonnet of government, because they're not stupid, like do they really, like in reality, is this just a way of them recognising the hospitality sector that is absolutely destroyed and on its knees and about to lose loads of it, and this is their way of giving them a break, but wrapping it up as, you know, helping the consumer when they know they've got no control over whether the business passes this on, and they know that most businesses won't pass this on. Why would they? They're just going to compete on the market as normal. Now, it might get passed on through competition, you know, because the one that does cut it might get more, but it's not really that competitive. You've got a big theme park, you're not really competing with another theme park nearby. They tend to be few and far between. So, what's your thoughts?
Yeah, I'm a bit mixed on this because I think, you know, the government has got huge hospitality bodies lobbying it all the time. So they're very aware, you know, they would have floated this idea past them before it was announced. They don't just go and announce something in the news and it's the first time the hospitality industry are finding out about it. Yeah. They've got specialists, they've got ears on the ground, and they've got a sounding board. So they would have had those conversations around the fact that, you know, this 15% is not going to get passed on to consumers. But it's the right thing for the government to stand up and say to that's what they're doing.
Yes,
that's the
demographic
that they're targeting with their messaging.
Yeah. So actually, you know, the fact that most people will take that, most families will take that as a, oh my goodness, the government's really helping me, that's great. That's all they care about because the message has gone in. The fact they don't see that is irrelevant, but the message has gone in and that's what it's about. It's about the optics, as they always say, isn't it?
But I think there's a bit for me that's missing here because, you know, this is a very specific type of hospitality business and it's only running for school holidays. So it's very child orientated places. And actually, there's way more to the hospitality industry than this. And that's the bit that's not being catered for. What about all the other restaurants and cafes and things like that? And, you know, I don't think that, I may be wrong because we don't have kids, so we don't really understand this industry maybe as much as other people do. However, my gut is telling me that if you've got to entertain your kids all school holidays, 10-15% on a ticket price does not make the difference whether you go somewhere or not. And therefore, it's the difference as to maybe whether or not you go and you buy a coffee or an ice cream while you're there versus take a packed lunch.
And just to put in this, so the Institute of Fiscal Studies have looked at this and have said that the changes that have been proposed here will save an average of £10 per household per year.
£10, it's nothing.
So that's the difference. So that's what it's just and I'm assuming that in their research they've assumed that they will pass the cost on to them. But £10, it's literally a headline, isn't it?
Yeah.
This whole thing is a headline, but it's an absolute lifeline to the hospitality sector. And here's something that's really interesting, is that it's very contentious because VAT is priced at 5% in hospitality in Germany and France.
But I know this is referred to as hospitality, but I
know it's not broadly hospitality. It's very specific. It's
actually like food and restaurants that are priced at a lower rate across Europe. It's not these types.
Yeah. Well, maybe
places.
We're doing something different. But what's interesting about when it happened in Europe is that when it actually started as a VAT holiday and it just ended up getting extended and just ended up baked in. So I guess a question is, I wonder whether at the end of this 10 weeks, if they see positive noise out of this from the hospitality sector in terms of, how it's helping the economy and various things, I wonder if this will be capped, because they always say, every politician always says the same thing. It's really easy to give the benefit. It's almost politically impossible to then take it back away again. And we saw this in COVID with lots and lots of things where they're still in place now, or they struggle to wean off it. So I wonder whether this might be the start of a new VAT rate in these certain sectors. You never know.
Yeah, look, I think for the businesses that receive this 15% cut in the VAT, if they don't change their pricing, then it is a lifeline, because a huge amount of their take-ins will come in the summer holidays, for sure. But all of the other businesses that are still struggling in the hospitality sector, arguably it's restaurants and cafes that need this VAT cut more than ever, because the raw produce that they're buying doesn't have any VAT on it. So they can't claim any VAT back from the government, and therefore they just simply lose 20% of their sale. That's all there is to it. So it's... I don't know. It's very niche. It's very odd that they've targeted kids so much. Why the hell are they targeting kids? What about everybody? We don't have kids and we don't get anything now.
But that's their, the 2-child cap. Their entire progressive policy is aimed at children, isn't it? It's the backbone of their policy.
It's a bit weird though. But the other thing that they've done as well, moving on to number 5, is free bus travel for children, but just in August. This one, you want to go in July? Tough. Want to go on the 1st of September to your theme park and get your 5% VAT?
Free bus travel for children for August. It's so specific. I just wonder how this messaging is going to get through to families as well. That it even exists.
I wonder. There is an element of this that I wonder, is this linked to the fact that in school holidays, a lot of families will be relying on grandparents looking after the kids, and grandparents will get free bus travel. And so therefore, is it potentially
to align?
I don't know if there's something around that, but yeah, bit bizarre. Only in August, free bus travel.
Very specific.
Really, really random. And the next one. Now, no food tariffs. This kind of went a little bit under the radar. I think if you're not part of any of the maybe like greengrocer environments, that type of thing, like supermarkets, if you don't sort of live in that sort of world, then this might have slipped under the radar. But essentially, they cut food tariffs on what Rachel called essential items. Now, typically these foods attract tariffs of 5 to 15%. So it's actually quite a significant cut in, it's a very specific list of 100 products. Rachel called them essentials, which I think is really interesting for a Labour government to refer to avocados, dried figs, quinoa, green tea and licorice as essentials. But there we go.
Oh, I don't think I ever have any of those.
No, I mean, I did obviously pick the worst ones out.
But...
However, they did also include things like baked beans, ketchup, crisps, things like that as well. So it's quite broad. But it's 100 food items, and the tariffs of 5 to 15% have been cut to 0. And there's a consultation ongoing that they'll decide by the end of June whether they'll extend that into 2028 permanently as well. Now, it's been met with quite mixed feedback from food sellers and food producers. Obviously, if you're just an importer and you're just importing and then selling, like supermarkets and stuff, it's a benefit. Potentially we'll see food prices come down, or we just won't see food prices increase. It's definitely a play to get inflation under control. However, UK food manufacturers are quite angry at this, because they're saying that now they can't compete with cheaper imports coming into the country. There's no barrier to it. So that's something to bear in mind, is that now it's potentially going to mean that food manufacturers in the UK, supermarkets will just buy from cheaper areas instead, because there's no tariffs.
Got it. Excellent. And finally,
help for farmers.
What?
I know.
Help for farmers. This sounds very un-Labour.
I mean, look, honestly, if you're not in the farming industry, I think one thing that I do love about Jeremy Clarkson is that it's put what really happens in farming at the forefront of everybody's mind. Like,
Now, I read an article last week from Jeremy Clarkson, which was shocking. I'm sure it's going to come out probably in his next series or whatever else. But this year, he's decided to not even farm, I think, 95% of his fields whatsoever, because basically when he sat down and crunched the numbers with Charlie, the business guy he works with, he said that if he farmed his fields this year, he would make a £70,000 loss to even farm them, because of the price of fertiliser and because of everything else that's going on, and because of loads of tariffs from governments and restrictions from governments and all sorts of various things. So he's just decided not to bother this year at all. I think, like, his point is, like, if we all just do that, we all just become totally reliant on export. Look where that's got us with fuel and everything else. Like, we're trying to become self-sustainable. Yeah. It's a very worrying place to be if we've got just like shed loads of fields and the ability to farm, but we just make it commercially unviable to even bother. How sad.
Yeah.
How sad.
I mean, just to give our listeners a little bit of a flavour of what's happening at the moment. So obviously, farmers, a huge cost of farming is diesel. So
I forgot about diesel fertiliser.
Everybody knows. Yeah, everybody knows what's happened with fuel prices. Now, farmers legally in the UK can use something called red diesel, which is essentially just diesel dyed red, because it's not available for resale on the market, but it's taxed at different rates. So it doesn't attract the same taxes and levies that buying fuel diesel at a petrol pump would. That's literally the only difference with red diesel. But they've cut some duty on red diesel to try and control some of the inflation there. But again, it's not a drop on the 50% increase of red diesel. Cut 5, 6, 7% off of duty, it doesn't do anything. But also fertiliser prices have doubled. Fertiliser has gone wild, and so they haven't even said that they're going to do this. The EU actually ruled out an introduction of a carbon tariff that was due to come in at the end of the year, and that's what the government's consulting on at the moment, is whether that will go ahead or not. And I think it looks like that's not going to go ahead. It's essentially an additional tax, a carbon tariff that doesn't exist at the moment, that's coming in at the end of the year, and they're consulting on that. But I think the problem with this is that feeds into everything, doesn't it? People have to eat. So if farmers are really struggling to make ends meet, that feeds into supermarket prices. Food inflation goes up. When food inflation goes up, you have to pay your employees more, so your profit goes down. It's just like a vicious cycle, and it's such a shame that at the very end we've got help for farmers and there was hardly anything on there.
Yeah. It doesn't even get close to scratching the surface of what they've been up against. I'm sure it probably won't make any difference. It's not going to suddenly make you be able to, farm those fields that you chose to down tools on.
So look, there were 7 changes that Rachel Reeves introduced. It was the 12-month vehicle excise duty holiday for HGVs, where they pay £1 at renewal, increase of the mileage rates from 45p up to 55p. That puts £1,000 back in your pocket if you do 10k a year. Fuel duty freeze up to £5,000 a year per truck, potentially, for HGV companies. VAT cut on some kids' hospitality and attractions, down to 5% only for the school holidays. Free bus travel for children throughout August. Immediate cut on food tariffs for 100 essential food product items, so stock up on your quinoa while it's cheap. And help for farmers.
Excellent. And that is a wrap. Let's move on to this week's Profit Cash Growth Extra.
Would that be a sandwich or an actual wrap? Who knows? So this week's Profit Cash Growth Extra, I want to plug a product called Apron. Essentially, Apron is like a digital receipt system. So you plug all your invoices, receipts, everything like that into it. It's the one that PCG recommends because there's loads of other features to it, including payment runs, free expense cards, mileage claims, all of that kind of thing is built into it. But what we're talking about today is they've launched a new feature called William. William is their AI bot. But one of the brilliant things about William is that William has access to your bank statements via Xero or QuickBooks, any system that you're connected to. And what it does is it looks for payments on your bank statements that don't have a receipt yet processed. And then if you connect your email up to it, it will scan your emails and pull those receipts in automatically.
Which is absolutely brilliant if suppliers email invoices. Not so useful for the suppliers that don't email invoices.
Yeah, where you get those emails that make you log onto a system and download an invoice, it is really
like
quite
Google
frustrating.
Or, there's loads of them, isn't there? So I'd like them to solve that one, actually, because actually what they've done with the email one is they've not really solved a problem, because you get the invoice anyway, it's not lost, it's easy to send in, but really they need to solve the problem of the ones that you have to log into portals, energy companies, all that kind of stuff, which is really annoying.
Well, there is a tool for that called Fetch, which exists on Dext, and it will log into those portals and download the invoices for you. The only restriction is now with two-factor authentication, some of those you get logged out quite regularly.
Yeah.
But yeah, if you are somebody that downloads, for example, a lot of things from Amazon, eBay, utility companies, telephone companies, all of that type of thing, then check out Fetch. That comes free when you use Dext, and it will log into those portals and download the invoices.
I mean, what they could do is pass a law that seems really sensible, which says that it's a legal requirement to give everyone an invoice, just like it's a legal requirement to give everyone a receipt in a shop. You know, I don't understand why you don't have to send your clients an invoice by law. Like, seems crazy, doesn't it?
What you're saying is email it, but
actually,
mail.
The law says put it in the mail, put it in the email.
The mail?
No, but my point is it should be sent to you. Like, you don't...
Yeah,
like,
I mean, look...
putting it on your portal is not sending it to the client, is it? Just make it... It wouldn't be difficult for you.
The law says that it has to be made available, and that's what they're doing.
That's the problem,
anyway,
good.
If you're a PCG customer and we haven't yet spoken to you about Apron and getting William hooked up, then we will be in the next few weeks. Otherwise, if you're not a PCG customer and you're interested in it, then check it out on their website or drop me a message. I'm more than happy to talk about it.
Why is it called William?
No idea.
What a strange name to call, like, just a feature in your product. People do come up with some weird things, don't they?
Makes it feel a bit more human, though. I guess maybe William isn't a very common accountant name, so you could be like, who did that? Or William did it.
Okay. Oh, so accountants can pass it off as like a person that's in their organisation going in the inbox for them to collect this stuff. That's probably...
No, but I think it's like, colloquially, you'd need to say... You know, like when you're like, who did that?
Colloquially, that's call your language. It's like you've swallowed an Oxford dictionary. Thanks for joining us for another week's podcast. As always, if you'd like to work with Glenn, the team Profit Cash Growth, go over to the website, profitcashgrowth.com. On there, you can book a discovery call. We can mock up an example monthly report for you of what it would look like to work with them. And as always, please rate, review and subscribe. Follow this wherever you listen to it and share it just with one business owner friend. That would be greatly appreciated. And as always, we will see you again next week.